Hey there, folks. Let me know if you can hear me out there. I see the first couple of people logged on here. Okay, guys, today's just going to be a financial planning live stream. You can ask me anything about financial planning related, tax management related, investment related, anything like that. I wasn't planning on this. I'm just trying to test out some new sound equipment. So, all right. So go ahead, guys, ask away, and I will endeavor to answer your questions. And I promise you guys, if I don't know the answer to something, I'll just say I don't know. All right. Okay. Before anyone asks about the Super Bowl, I did not watch the Super Bowl. I went fishing instead. So I had a great time. Didn't catch anything. So, okay. So Abraham Chavez, first question is, he says, hey, good afternoon. May I please get your opinion on cciv, which is Churchill Capital 5. I'm presently sitting on 500 shares. Thank you and God bless. Well, So here's what's going on in the world of SPACs right now. There are a million of them out there getting ready to happen. That's an exaggeration, of course, not quite a million, but there's certainly going to be several dozen this year, if not maybe even 100 or so different SPACs going public this year. Churchill Capital has not filed a letter of intent, as far as I know yet, saying that they're actually going to try and merge with Lucid. I tend to think that those rumors are probably correct, and they will. There are a lot of companies that have gone, a lot of EV companies that have gone public by SPAC recently that are destined to fail. They are, and that's not just because they're bad companies. It's because the EV industry is about to get incredibly competitive. And Tesla has a lead on everyone else. And now all these latecomers that are coming to the game, they're going to be competing with some well-capitalized players out there who already have production facilities. So I think, though, that Lucid actually has a better shot at success than any of the other guys that have gone public recently. So anyway, I'm keeping an eye on that myself. I can tell you the company that I really don't like right now is Faraday Future. I just don't think they're going to make it at all. I think that that going public by SPAC is really just delaying the inevitable for them. They're not going to sell $180,000 cars and work their way down the value chain like Tesla did. The opportunity to do that is pretty much gone. So what percentage of growth versus value stocks do you recommend in your portfolio? Well, a lot of that comes down to what you're defining as value. I can tell you one thing, that the traditional value investment metrics that you use to evaluate whether or not a stock is properly valued, by most investors have thrown those out the window and haven't paid any attention to those now for a couple of years. Really, for 2 decades, value investing has kind of been dead. We keep hearing that value investing is making a comeback. I can tell you that most of my personal a lot of my personal assets are invested in broadly based ETFs, and I don't have as much in individual stocks as it may seem like based on my channel. My individual portfolio is about 30% individual stocks, and the rest of it is in broadly based ETFs. You could say in a way that I'm still considered a very aggressive investor, because 100% of my portfolio is in stocks, and I have 0 in bonds right now, except for a small slice in junk bonds, and that's it. Okay. I'm following HOL as one of the interesting SPACs, in my opinion. Florin said that. Actually, I don't know who that is. I'll take a look at that, though. James Goodcheers, if you get dividends in the Roth or an ordinary investment account, are any of these taxable as income in that year? So if you get dividends in your Roth account, it's not taxable in that year, and it's not taxable as long as you take it out after age 59 and a half. If you take it out before age 59 and a half, there would be a 10% penalty on that. But dividends received in your Roth account, under most circumstances, there's only one circumstance where if you received a dividend or a distribution in a Roth, that it could be taxable. And that's if you have something called a master limited partnership, and they have business income that's not related to their core business. Then occasionally Some of that dividend is taxable, but that's an extremely rare event that doesn't happen very often. Now, if you get in an ordinary investment account, whether or not it's taxable really depends on your particular tax bracket. Anywhere from zero, if your income is anywhere from $0 to $80,000, you may not have to pay any income taxes on those dividends whatsoever. And your dividends get preferential tax treatment pretty much all the way up your income brackets until you hit 300,000 or so in income. What's the most you recommend distributing the penny stocks in your retirement account portfolio that I closely watch? No more than 10 or 15%. And Mr. Benjamin, I think no more than 10 or 15% is probably a fairly good percentage. It's okay to swing for the fences with a portion of your portfolio, but the closer you get to retirement, the more careful you want to be about that. Yeah. So let's see. Hold is a SPAC for Astra Rocket Company. Okay, so HOL is the SPAC for Astra Rocket Company. Even though they have huge competition, I still think they can have a decent change. The satellite market is going to be huge in the near future. Maybe it is. I am a little bit behind when it comes to covering the Cathy Wood's space ETF at this point, and I have not looked into a lot of the companies that are going into that portfolio. So I am looking forward to getting more into that. That's really right up my alley in terms of my nerdiness. I would love to see us get into more space exploration. So your background looks very nice. Where are you located? I'm actually located in Southern California. I live in the San Diego area. And the background is aspirational. Even though San Diego is very nice, one of these days I want to retire to a tropical paradise somewhere. Let me see here. Do you think NIO can ever get into the car market without their in-house auto manufacturing or in-house manufacturing? Well, if you saw my video on Sunday that I released on Sunday about NIO, they are pretty much getting their own factory, and it's one that's going to be, they're getting a lot of financial help building it from their regional government. And so I think that they're going to be moving down the value chain as well. If you look very closely at how the Chinese electric vehicle companies that we know of are structured right now, you really have, WM Motors, which is not well known here, Xpeng, NIO, and Li Auto. They're all operating really in separate spaces right now, and I'm pretty sure that's by design. If you look at who backs those companies and the money behind them, usually one large backer of one of those companies has a small investment in the other company. There's no interest in actually seeing them compete against each other, and so they're looking at seizing different markets. Xpeng's market is really that down market, sort of middle tier, younger market, and NIO's looking for an older crowd with a little bit more money. And I think that's by design, like I said. So do I want to move down market? I think they will in the future once these companies are a little bit more established. So, hey, Jason, I want to hear your thoughts on IDEX. If you ever looked in, I've looked into it a couple of times, and I haven't been able to find a compelling reason to drop any money in it myself yet. I'm not seeing what everyone else is seeing. That's for sure. I'm not seeing that they have any huge advantages in the technology market or anything like that. When you're looking at, and I hope I'm actually referring to the same company here, when you're looking at all the different Chinese companies that are looking at getting into the EV market, no matter how that is, like I'm looking at people right now that are looking at like forklifts, looking at moving equipment and moving goods around and things like that. All of that is getting extremely, extremely competitive, and I think we're going to see a winnowing out of things here pretty soon. So, Kingston James, do you think that Walmart will be able to compete with Amazon and e-commerce in the future? It's already competing with Amazon. So Walmart's online presence is probably a lot bigger than a lot of people think it is, and they're doing quite a bit more than people realize. And I think they're actually going to make that switch. They really already have made that switch, but they're going to make that move into the future where their physical locations are probably less important than the actual digital presence. I think they're going to make that relatively seamlessly. They're investing in technologies, and they're investing in new ways of doing business as well. So let me see here. They already have contracts with companies like NASA, Pentagon, Florian. Let me see who you're referring to again. Yeah, Astro Rocket Company. I'm sorry, Florin, I just don't know anything about it, but I am going to look into HOL, that SPAC, yeah, because you mentioned that. So guys, I wasn't actually planning a live stream today. I wanted to test my new microphone. So I hope you guys can hear me pretty well. And yeah, feel free to ask any questions you like. Thoughts on Tesla's statement about Bitcoin? Not sure what to think. You know what? I'm not sure what to think either. I know one of the big problems with Tesla buying $1.5 billion in Bitcoin is that it just makes it a little bit harder to place an actual valuation on Tesla for folks that are really into like fundamental analysis. But let's be honest, folks, no one who's invested in Tesla gives a crap about Tesla's fundamentals. We're investing based on its growth potential, right? No one really cares about what its earnings per shares are or what its earnings per sales are. We're investing in this wild future idea. So I don't really care what Bitcoin does to their balance sheet. I do think that it's curious that they're going to accept Bitcoin as a form of payment, though, especially if you're looking at paying in Bitcoin and there's this long lead time between when you pay for a car and when it's delivered. Or when you order a car and when it's delivered. I'm wondering what that's going to do to the average price collected for a vehicle. So, yeah, let's see here. Should we buy Doge? Where should we buy Dogecoin on Robinhood? Well, you can't buy that through Coinbase right now. I didn't try, but I looked for it through Coinbase. And so Robinhood would be one way to do it. I will say that I am not a big fan of Robinhood right now after the GameStop debacle. But to be honest with you guys, that's one of the reasons that you don't see a Robinhood link on my videos like you do with a lot of other YouTubers, because I had a Robinhood account back when the market crashed with the first start of coronavirus in April of last year. Actually, it was in February of last year. And every time the market was down huge, Robinhood's app went down on 2 occasions when I wanted to make a trade. And thankfully, I didn't keep a lot of money in those accounts, but I did want to make a trade on those days, and Robinhood was not available. I sent in a complaint, and their response was, it's not our fault. We accept no responsibility, and you're screwed. So I don't use Robinhood anymore because of that. Now, any of the other apps essentially have the same thing in their user agreement, that they're not really responsible for app outages, right? And they take no responsibility for it. It doesn't matter. I just got a really bad taste in my mouth from using Robinhood, so I moved on to using WEBULL. There are a number, and I'm actually surprised that despite everything that happened with GameStop, the amount of downloads for Robinhood is increasing, and people are using it more and more and more. It really goes to show you that essentially all news is good news when it comes to selling products sometimes. Let me see here. As an Amazon seller, I can tell you a few things. Walmart is not so third-party seller friendly like Amazon. They're way ahead. That's true. I've actually worked with a couple of third-party sellers through Amazon before as clients, my financial advisory business, and that's one of the things they said, that Walmart is not as third-party friendly. Ronnie Rivero says, I agree. I would say that Tesla is the Trojan horse. Ronnie, I'd like to see more, or I'd like to hear more of an explanation of that at some point. Is that, I'm a natural born skeptic, and I owned what was originally a really small amount of Tesla shares starting in 2011. It was just 100 shares. And it was kind of what I thought was a YOLO throwaway investment that I thought maybe could crash and burn and never make any money. But one thing I can tell you about Tesla is that over the years, my skepticism has been proven wrong over and over and over. And Tesla is a company that it may not deliver when it says it's going to deliver, but it always delivers on its promises. And it's not necessarily made me a believer, because I'm not a believer, but it's convinced me that the management is not making promises that they don't feel they're going to be able to keep, even if it might be a little bit late. So when I hear from management that they think that the Tesla energy business will one day be as large as their energy storage business will one day be as large as their automotive business, I tend to believe them because they've delivered on all of their other promises. Let me see here. Let me look, see I just joined the chat. What do you think of investing at least 10% in crypto? So right now, Ozai, I'm not really seeing first of all, that would be in my investable assets portfolio. Maybe having 10% is okay, not 10% of my overall net worth. That would be, to me, that would be too high. I don't really see 10% in crypto right now necessarily as an investment. I use it really as an asset that's not correlated to anything it's not really correlated to the stock market. It's not correlated to gold. It's not correlated to real estate or anything like that. It's behaving more and more like an alternative asset, which is something that I'm really looking for. If you guys haven't been paying attention to what's going on in all markets all across the last 2 decades, it used to be you could predict with relative ease that when stocks went up, bonds would decline in value. When stocks went down, bonds would increase in value. But that's really just an illustration that there were all kinds of asset classes that performed in ways that were relatively predictable in comparison to U.S. large cap stocks. That's no longer the case now, where we don't have that diversity and correlation anymore. All asset classes are now becoming more and more closely tied to U.S. large cap stocks. And as investment has become more democratized, we're seeing that there's less and less, there's more and more correlation between asset classes and less diversity. I like crypto right now, not for crypto's sake, not because I think it's the greatest investment in the world. Just I like keeping 2 to 3% of my portfolio in crypto, just to use it as a hedge against everything else going on in there. But I'm not. I mean, I don't own enough of it to say it's really a huge portion of my portfolio. Like I said, it's never more than 2 or 3% of my portfolio overall. So Ronnie Rivero's Norway, the Trojan horse. Okay, are you talking about how? I'm still not sure what you're referring to when it comes to Norway. Norway is a great EV market, Ronnie. More than half of all vehicle sales last year were actually electric vehicles in Norway, and a lot of them were Teslas, but a lot of them were other types of vehicles as well. I don't know if you guys knew this or not, but the #1 selling electric vehicle in Europe right now is actually the Renault Zoe. And it's a fantastic little vehicle. It sells for roughly 26,000 euros, which is not far away from that $25,000 electric vehicle that Elon Musk wants to sell. And it's outselling everything else in Europe right now. And it gets roughly 220 miles. It has roughly 220 miles of range, seats 4 people. It's a fine commuter vehicle, and it's doing really, really well. And I think it pretty much demonstrates that. I mean, if there wasn't enough evidence out there already to demonstrate that EVs are the future, I think that the dominance of the Renault Zoe out there is pretty much demonstrates that conclusively. Halo Hat says audio and video are looking great out here in the middle of nowhere, Utah. This is just a cheap webcam, guys, but I do have a better microphone on here. I wanted to try that out, and that's really what I started this live cast to do, was just try that out. I wasn't intending on going live today, but I haven't done it in a while, so I was like, why not? Amazon, let me see here. Do you do any pre-IPO investing? Demos is asking. Actually, there are so many, because I'm a licensed financial planner, and I'm actually registered representative through a registered investment advisory firm here in San Diego. I'm actually prevented from doing most pre-IPO investing. The steps necessary that I would have to go through in order to do that just make it extremely, extremely difficult to do and really annoying. So yeah, I don't do a ton of that. In fact, it's been probably 7 or 8 years since I've really been able to find a compelling enough company to go through all the paperwork to do it. Let me see here. James Goodcheer says he moved away from Robinhood, uses Ameritrade, got a second start in Fidelity. So I use Ameritrade for a lot of my personal accounts. Happened by accident. I've had a Scottrade account since forever, and they got bought out by Ameritrade, and now Ameritrade got bought out by Schwab. The company that I work for actually clears transactions both through Schwab and through Fidelity. I can tell you one thing for sure. Fidelity's back end is a hell of a lot more organized and easy to work with than Schwab's back end. Schwab has just grown too fast, too quickly, made too many acquisitions over the last couple of years. And I continually have problems working on the back end with Schwab, and far fewer of those with Fidelity. So let me see here. Ronnie says, what I mean is just like you say, most investors don't really care so much about valuation when it comes to Tesla, but rather what they're working on in the future, solar energy storage. Yeah, I agree with you, Ronnie. I just wasn't sure what you meant by the Trojan horse kind of thing. To me, Tesla's completely out in the open about that stuff. They published their secret master plan, and their secret master plan part updated in 2016. If you guys haven't read those 2 blog posts from Tesla, they're hilarious. Okay, of NIO, Xpeng, and Tesla, which do you think has the most growth potential from today to 2025? Yeah, it's really obvious. I never like giving the really obvious answer, but I think the obvious answer is Tesla. And it's because they are really not, their energy storage solutions are their energy storage solutions. They're not something that belongs to someone else. And I think you're going to see, beginning this year, I think that you're going to see tremendous growth out of their energy storage business. By 2025, we could be seeing them producing 3-4 million vehicles a year, and we could see them doing energy storage deals in the terawatt range, is what I think. So I think that Tesla by far still has the greatest growth potential. So here's what I think about NIO and Xpeng and Li and WM Motors, which if you guys don't know about WM Motors, you should be looking into WM Motors as well. I think they all have potential, but the car market works very differently in China than it does here. They have 130 brands that are sold. Here in the US, we really don't. We have really 2 or 3 companies that own everything here, and that's Ford, GM, and Tesla. Chrysler essentially went out of business and was bought out. GM did go out of business in 2009. Ford's the only surviving brand out of 1,600 or so founded in the last 120 years. This is an incredibly competitive environment. It's incredibly competitive in China as well. They tend not to let a lot of their brands simply disappear and go out of business. That's why they have 130 of them. So if you don't know anything about the Chinese manufacturing process, there's this whole permitting process that you have to go through to become certified and get a license to produce. And once you've been through that process, you essentially have enough in the way of connections, financing, and very little interest in local governments seeing you fail, that they're often willing to step in and support. There are many automakers that if they did not exist in China, they would be completely out of business everywhere else. I don't know if you guys are old enough to remember what it was like to see Chinese automakers that were trying to break into US and European markets back in the late 1990s. The products they were bringing over they were no better than East German cars from the 1990s. They were really just terrible. A lot of that has changed with electric vehicles. Number one, the Chinese government has made this giant push to move itself up the value chain when it comes to manufacturing. Number two, it's actually just a lot simpler to make an electric vehicle than it is an internal combustion engine. There's just a lot fewer parts involved. Manufacturing methods have changed so much that it's making things a lot easier to do. So moving up that value chain is quite a bit easier. One of the things I will freely admit to never understanding as well as I should is the power of brand. And I mentioned before in several videos how I kind of missed the boat when it comes to Apple because I always focused on a competitor that had a better technology rather than looking at the awesome power of brand. So NIO appears to be developing that awesome power of brand. And if you think about it, Xpeng really is the sort of the Samsung to NIO's Apple, right? So NIO is coming in as the Apple of EV manufacturers in China, and they're producing this high-end, high-quality vehicle that is sold you as a lifestyle. And Xpeng is really going after that broader down market segment where there's a lot more people that can afford their vehicles, and they're producing a vehicle that's great, but doesn't blow your mind like NIO's vehicles do. Both business strategies will be successful. In fact, if you're paying attention, you'd realize that Apple only has about 14% of total market share at this point. And, Samsung has equal market share. I actually haven't looked at those figures in a couple of months, but it's pretty close to equal market share. They've both been successful, although one has a perception of being far more successful. But yeah, so I think that there's actually plenty of room, even if NIO never becomes the next Tesla, even if Xpeng never becomes the next Tesla, there's still plenty of room for us to see better than linear growth in these stocks over time to really still see exponential growth over time in these stocks as well. So, I think that was a really long-winded answer to who has the most potential growth from today to 2025. I think that if you invested in NEO, you invested in Xpeng, or you invested in Tesla, you couldn't objectively be disappointed by the gains you're going to make over the next 4 years. You would only be disappointed if you invested in one of those and not all of them by comparing yourself against how one of the others grew, right? So, yeah, I think that if you were just comparing yourself against, say, the S&P 500, I think that NEO, Xpeng, and Tesla are going to outpace, all of those are going to outpace the S&P 500 over the next 4 years. Okay. So I own no shares in Tesla, but this is how I see it when I buy Apple. Yeah. So let me see. Yeah, the Trojan horse is in using Tesla as the cheaper entrance to something bigger. Okay. Oh, I lost something here. Hold on, guys. I like your content, but can you turn up the volume on your videos? It's very low to hear if you're listening to them. Yeah, I can try. I'll be honest with you, Mick. I know I edit all of my own videos, and I really don't know the first thing about editing videos. Okay, so, and my computer is so slow that it's actually really hard even to use my video editing software. I will try to do a better job of making my my volume. The most complaints I have are about my background and my volume. All right, so I really love International Lithium Corporation and RZZF, Global Battery Metals, Lithium, Nickel Mining, penny stock plays. So a couple those are very smart investments for the future. Lithium miners, nickel miners, manganese miners, cobalt miners. I think cobalt's probably going to go away from battery chemistry just because it's politically problematic. But I think, and if you guys didn't watch my video on like what happens when all the lithium's gone, and if you haven't done any research on the chemistry behind sodium-ion batteries, you realize that a lot of the chemistry is substantially similar when it comes to sodium-ion batteries and lithium-ion batteries. So many of the same cathode materials or cathode chemistry and electrolyte chemistry is going to be able to be reused, but you're going to be able to eliminate. So I don't know, for example, if a sodium ferrophosphate battery is possible. Like, I don't know if that's really possible. I haven't actually tried to figure that out yet. But many other types of cathode chemistry are going to be relatively similar just by simply replacing lithium with sodium. Yeah, so that research has been done. So I think that investments in these battery producers, these battery component producers, I think it's going to be very successful in the future. Halo Hat, Renault, Nissan, going to do fine. Thank you. Yeah, I mentioned the Renault Zoe, but I don't know if I guys told you or not, but I used to live in Belgium and France, and I own Renault vehicles, and I can tell you that I was never happy with the quality of vehicle that I owned. And Kingston James said, "Did you watch the MVIS HoloLens video?" No, I haven't had a chance to watch that yet. And I did look. I brought up the short report by Hindenburg. Hindenburg was really, this company was really spot on when they made their takedown of what was it, Nikola earlier this year, and everything they said in there was pretty much true. And I was already pretty much on that as well. So microvision MVIS is not something that has crossed my radar before, but when I looked at the price action of the stock, there wasn't a reason for and there's a couple of other stocks like that recently, that there isn't really a reason for so much investor interest in the stock, other than the fact that there are just so many additional people interested in investing that haven't been invested or interested in investing in the past. So Microvision's issue right now is they seem to be riding sort of electric vehicle interest in Lidar right now, when none of their patents have anything to do with Lidar. None of them do. So, not with Lidar, but with electric vehicles. They have about 250 patents out there. Only about 10 of them mention Lidar at all, and none of those have anything to do with electric vehicles. So there may be a reason to invest in that for some other industry. I just haven't done enough research in there to understand that. So let me see here. EV, yes, because buyers of EVs don't pay VAT. Sales tax was about 25%. Yeah, okay. Do I own any Volkswagen? No, I don't own any Volkswagen. Not a terrible investment. I will say people do have kind of short memories, though, when it comes to Volkswagen. If you guys don't remember the Dieselgate scandal, where they actually had programmed their computers to react to being smog tested, and allowed them to sort of fraudulently pass emissions tests here in the U.S. They admitted to that. They paid a fine, and everyone seemed to move on and forget that they had done that. That was seriously underhanded and duplicitous by the company. I'm actually, so I know a couple of engineers for Volkswagen that work here in San Diego. There's a large distribution center here. And I got to be honest with you, after seeing the ID4, not hugely impressed by it. It's everything that I expect a Volkswagen to be, but there's nothing in it that's actually groundbreaking. And if you look at the price point for it, I'm not enthusiastic about it. So car holders. Which top 3 stocks are you currently thinking of buying? So guys, I'm thinking about making a rule that whenever I mention a stock in a video, that I'm probably not going to sell it or buy it 5 days before or 5 days after I've made a purchase. I just want to be, I'm not a journalist or anything, but I would like to establish, maybe have some self-imposed rules of journalistic integrity. I think that would make my videos a little more genuine. I think that would make my live casts more genuine, that sort of thing. So if I do mention something right now, I'm not going to buy it for 5 days. Right? And one of those is one of the things I'm really interested in right now is IPOE, which is another which is a SPAC. It's one of the few SPACs I'm actually seriously interested in because they're looking at merging with SoFi. If you have not looked into SoFi Social Financial and their loan portfolio, and I know a lot of younger people are very focused on their app as far as how you can use it to trade. That's not where they make the majority of their money. They make the majority of their money off of their loan portfolio. And so here's why I'm very excited about this. Number one, their revenues look good. Number two, SoFi's looking at becoming profitable this year in 2021, which a lot of SPACs that are going public right now are pre-revenue. They have no revenues. Even if they have revenues, they're years away from profitability. SoFi, on the other hand, is probably pretty close to being profitable at this point right now. Not only that, when you look at fintech, the fintech revolution, and you look at the words disruptive innovation. So the disruptive innovation model, when you look at how Clay Christensen, the guy who came up with the theory, designed it, Tesla didn't really follow that model. Like, instead of addressing a market that was ignored and that no one wanted to pay attention to and kind of sliding in on that low end, he started off at the high end and sort of worked his way down the value chain, which is basically treated like a new basically like a new technology, right? Which it was. Fintech, on the other hand, is working exactly the way Clay Christensen predicted that disruptive innovation would happen. They are serving an underserved market, like people who are unbanked, people who can't get loans through the traditional process. Not necessarily they can't get loans through the traditional process. I personally can't stand going to a bank and applying for a loan. The entire process is cumbersome. It's too complicated. And to be frank, it's just annoying. I don't like dealing with banks. And they are eliminating all that. Like, for example, I own a couple of small businesses. And for this year, for a couple of them, I applied for the PPP loan. And I applied for the PPP loan. I did all of it through online services rather than traditional banks. Well, no, that's not true. I did one of them through Wells Fargo, and the other two I did through online services. The one I did through online services, which was Cabbage, I was paid like 4 days after I applied. With Wells Fargo, it took like 2.5 months, and it felt like they crawled up inside me with a flashlight to make the determination. And they weren't supposed to do that. The whole process wasn't supposed to work this way. These larger banks are simply not going to be able to compete with the SoFis, with all these other companies that are coming along with Square and all that. There's too much institutional inertia. They're not going to be able to change fast enough, and little by little, their market share is going to get whittled away. And when that happens, there's going to be dozens of players out there that are whittling away at that market share. And I'm far more interested right now in fintech SPACs than I am in more electric vehicle SPACs. There are far more challenges when it comes to an electric vehicle company being successful than it comes to taking business or money away from these large financial institutions that are basically essentially dinosaurs and are never going to be able to evolve fast enough to avoid extinction. That's another long-winded answer to what I'm looking at. And that was only one stock that I'm looking at right now. And now that I mentioned it on this cast, I'm not going to buy it or sell it for the next 5 days. All right. But yeah. Okay. So number two, the other stock that I'm interested in for the most part is Xpeng. I actually own less Xpeng than I do NEO. I bought a lot of NEO when it was very, very cheap on a whim. Xpeng I bought at a much higher price. Xpeng's foray into factory building and scaling production is going really, really well. And they've managed to secure financing help from local governments along the way. They already have, one cell phone factory, a second one being built, and now a third one is in the planning stage and already has funding secured for it. So I'm extremely happy with the way they're building. And granted, they're going to have a lower margin vehicle focused on a much broader section of the market. So they're going to compete on volume. That is how they have to compete, and they realize that. And so I'm very impressed with what they're doing. I realize they don't have the brand power that NEO does. But like I said, it's a lot of times it's not simply the best technology that wins or the best brand that wins. Sometimes it's the person that produces the most, the fastest. And I think that Xpeng is going that direction. Let me see here. Car sales in Europe are being canceled. Dealers are having to cancel sales because manufacturers are short chips to make cars. Yeah, I actually made a couple of videos on this earlier in the year talking about the shortage of IGBT chips. How BYD is pretty much the only manufacturer that's not going to be affected by this because they make their own. But semiconductors are in short supply worldwide right now. Basically, it's not permanent, guys. It's going to take 9 months to a year for production to catch back up. But what happened is they shut down all the production line during coronavirus, but then demand was actually a lot higher than they anticipated. So now it's not necessarily building out new production lines, but a lot of it is just retooling things to get and bringing back up production. And the estimates that I was reading on this were anywhere from 9 months to a year. Let me see here. So many EVs are launched. Do we have that much demand? Plus, we can't forget the 100+ automobile companies. Your input. Yeah, so many EVs and companies are being launched. And I did a video back in October where I spoke for like 15 minutes and scrolling through that video the whole time was a list of 1,600 different companies in the United States alone that had failed, auto companies that had failed. A lot of the companies right now that we're talking about, that we're enthusiastic about, a lot of them are going to fail. I really think that 10 years from now, there's only going to be 5 or 6 survivors. There's going to be 2 or 3 survivors in the US. There's going to be 5 or 6 survivors in big survivors in China, and the rest of them are going to be zombie companies. There's a lot of zombie auto producers in China right now. Let me see here. Okay, Alex, I just talked about NEO and XPEV. So incredible stats on the electric car sales market. Yeah, December 2020, there are. France, 19% of electric car sales, or of car sales in France were electric. In Germany, 27%. Sweden, 49%. Netherlands, 72%. And Norway, 87%. Wow. So for 2020, for Europe, all of Europe, 23% of vehicles sold there were actually electric vehicles. So that's actually huge news. And I guess in China, 9.4%, that's amazing too. I don't know if that China number, China number would probably include the new energy vehicles, not electric vehicles. Their electric vehicle market share was a lot lower than that. So this week, Cathy Wood produced huge growth in the battery sector. So right now, at last count, there were 164 battery factories under construction around the world right now, and almost 100 of those were in China. Just 100, almost 100 of those were just in China. So yeah, I think she's right. There's a ton of different battery plays in there. The big 4 producers, though, are the one, Panasonic, CATL, Tesla, and LG, and there's one other companies there, or one other company there. I just can't remember their name. Did I say Panasonic? Anyway, those are the companies that are gonna benefit the most from this. So, have you checked out the XPEV CEO He Jiapeng? I have. He's a bit of a character, and I don't know if there's any truth to this rumor or not. But someone, a Chinese national, told me that He Jiapeng is actually married to the premier's sister. I don't know that that's true or not. In fact, it sounds a little fishy to me. But yeah. So let me see here. We would like to see Xpeng and NEO come to the Netherlands. Global Man said that. Je kan een klein beetje Nederlands spreken. Je hebt in Gelge gewoond. Yeah, I bet you guys didn't know that about me either. So Mr. Unique Mr. says, are we in a bubble? I mean, some of us are up 500% since April 2020. Where's the limit, or should we just enjoy the ride? Man, that's a question that I ask myself every day. And if you're asking yourself if you're in a bubble, then I think it's pretty likely that we are in a bit of a bubble. My question is it the entire market that's in a bubble, or is it just the EV market that's in a bubble? Is it limited to certain stocks? Is the bubble limited to all of these pre-revenue stocks? Because look, NIO, Xpeng, Tesla, Li Auto, these are not pre-revenue companies. These are companies with factories that are producing products that are being sold, and these companies cannot satisfy demand, right? So are those companies in a bubble? Probably not. Are they overvalued? Probably. Are they in a bubble? No. But if you look at Lucid Air coming out, if they come out and they're priced at $60 a share, is that a bubble? I would say yes. When you look at companies like Open Door coming out, I think that Open Door's valuation is actually eminently fair considering where their revenues were prior to the pandemic and where they could possibly be in the next 5 years. But I think there's a lot of companies out there that are certainly overvalued. So CCIV needs to merge with Lucid Holdings since 1173. Let me see here. Okay, Nikita says, hey, Jason, gives me a clap. All right. Hey, so let me see here. Should I invest in stocks? Maddie says, should I invest in stocks? Yes, you should invest in stocks. And I don't even need to qualify that. Yes, you should invest in stocks. So volume is fine tonight. Volume on other videos that people report is low. Not to worry. Okay. Yeah, IPO is serious and will change the banking industry. I don't think that it's just SoFi that's going to change the banking industry. It's going to be a lot of different companies that do that. Baidu, buy, hold, or sell at 277. I think Baidu is even a buy at 277. It's not something that I own as an individual stock. I just own it through an ETF. Tybar N says, I like your new house. Okay. I'm pretty sure that's the guy I heel hooked the other night. And anyway, hello, Jason. I used your WEBULL link several. I went through. You know what? Not many people have used that WEBULL link. Thank you very much, Nick. I actually, called a couple of people that I thought had used it, and they said that they didn't. So thank you very much. The stocks that I got through that WEBULL link, those are going into the portfolio that's controlled by. It's actually controlled, managed, and all the trades are done through a group of guys through my Patreon, right? They're called the Portfolio Manager Club. And all of the dues that the people pay to Patreon through the Portfolio Manager Club, those all go into the account too. So they're managing like $20,000, a little bit more than $20,000 of my money right now. It's a social experiment on my part. I don't think that a group of random strangers off of the internet can do any worse at managing my money than the average hedge fund manager. And I firmly believe that. And this is an experiment that I hope to keep going for a decade or more, where I want to measure the performance of a random group of people managing my money against, like the S&P 500 or the NASDAQ 100 or any sort of basket of hedge fund returns. So this experiment is going well. We've had a couple of meetings and a couple of really good discussions, and we're about ready to place our first trades. I initially said I was going to let 15 people do it. That's way too many. I think I'm going to limit that group to like maybe 5 or 6 people at most, and I'll probably start a second group if it becomes really popular. But we've actually had a lot of fun discussing ideas, investment ideas, and how those guys and girls want to invest my money. And I've been really impressed by the research they've done. So yeah, if you guys want to do that, then my Patreon link has been at on all of my videos lately. So all right here. But yeah, Nick Cooper, thank you so much. Also, the super chat features are turned on, guys. And let me see. Clay Christensen had an amazing life, even outside of disruptive innovation, worth investigating. Yeah, he did. Let's see, Terrence Kwan. I bought IPO after Chamath did an interview on CNBC over GME. The next day, the whole Robinhood fiasco helped IPOE jump. I was in 30. Okay, you're just letting us know. Excellent. There was actually a little bit of an opportunity to buy that this week because of the short report that was put out on Clover Health, which, by the way, Citron Research, they don't do anywhere near as good a job of teardowns as Hindenburg does. And I don't think they're really doing a public service. I don't think that their criticisms of Clover were entirely accurate or even fair. And they did another one on Hyliion that I didn't think was fair either. Hyliion is not out there making a ton of grandiose claims. And Citron Research and Bonitas Research is the other one where I don't think they're really great at. So a couple of really good short selling firms that I like. Number one are Hindenburg, and the other one is Muddy Waters. I think those guys do a great public service of bringing some really fishy stuff to the attention of the public. Muddy Waters, I can't remember the guy who's in charge of that now, but there was a whole string of reverse mergers with small cap Chinese companies that were done to get onto U.S. markets way back in like 2011, 2013 timeframe. And Muddy Waters was one of the only people that was actually sending investigators into China and sourcing things in China to figure out that these companies were all frauds. And a majority of them were actually frauds. I think at that point, there were more companies delisted for doing fishy things than there actually were legitimate ones listed. So I have a high degree of trust in Muddy Waters, a little bit less in Hindenburg. Some of their research has been faulty, but I don't have any degree of trust in Citron Research whatsoever. I think Andrew left as a freaking tool. You know what? I don't like insulting people on the air. I don't want to be that guy. So I take that back. He's not a tool. I take that back. Okay. Are you worried all about customer service from Xpeng? Have you experienced Tesla's customer service? It's actually horrible, but it doesn't stop them from selling cars. So I don't know. And I've heard conflicting reports. I just watched a video of some guy who was out in China and went to a NIO store and basically filmed the laziest employee I've ever seen. So, Mr. Unique says, I'll take NIO over XPEV. Remember, NIO is a brand, tried to create a brand and created the brand. XPEV is just a car company. Samsung is just an electronic company, but they have more market share than Apple does at this point. But like I said, I'm not sure that comparison is fair, or any of those comparisons are fair. They're not even going after the same markets, guys. So any thoughts on Lee right now? I know you bought some. I did too. I really don't have a strong conviction like doing that. So my thoughts on Lee is that they simply found a market. I bought the stock and it immediately declined after that, went down by 3 or 4% or something like that. I don't buy things for short-term investments, guys. I'm really looking at a long-term future here. When it comes to the large SUV space, the large electric SUV space in China, they really don't have much competition. That's one of the reasons that I like them. They don't have, and I think BYD is really the only company out there that produces a comparable vehicle that competes with them. So let me see here. But my position in Lee is only 250 shares or so. In Amazon stock split this year, if we ever had a chance to have an Amazon stock split, it's now that Jeff Bezos is no longer the CEO. I think we have a chance at it. Although I haven't seen any indication that that's something that they want to do. So I don't know. Let me see here. And Florence sent me £2. Thank you so much. BNGO is still a buy. They had some good news today. So I've been doing like legitimate research on BNGO, and the reason I haven't made a video on BioNano Genomics is that I am getting conflicting reports from folks that would actually know, like scientists. Like some people are telling me, some scientists that I've talked to have said that they don't have a unique technology, and some of them have said that it's unique and groundbreaking. So I haven't made up my own mind on that right now, and I don't have a position in BioNano. But yeah, so anyway, that's just my position on that. Whoa, Jason, just testing the super chat. Thank you, Florin, for the like I said, the super chat. You just said it. Yeah, so I really apologize for personally insulting Andrew Left earlier, even though I don't want to do that. I don't want my channel to be like that. So Muggy prediction was off and they said VW own. Okay. Fresh Aquarium says, I want to buy a P7. I'm going balls deep in XPEV and I'm trying to learn as much as possible. Okay. Fresh Aquariums, I don't know if you're located here in the US or in Europe, but if you live in Europe, you may get a chance to buy that P7 here pretty soon. Xpeng is already exporting the G3 to Norway. I don't see why they wouldn't export something else here relatively soon. Who are you? Jose Higuera says, who are you and why are you in my recommendations? No clue, buddy. You can watch or not. Totally up to you. What do you think about Fisker? And any comment on Henrik Fisker? Here's what I think about Fisker. I think Fisker didn't manage capital markets well, and they got in trouble. And I think that what they're doing now is not going to make them any more successful. I think that Lucid Air beat them to that second place spot, and I think that an investment in Fisker is you're doomed to disappointment. They might not go out of business right away, but I don't think you're going to see you're not going to see Tesla-like growth out of them. That's for sure. And let me see here. All right, so a lot of us have loaded money in EV car companies, but are you all watching the battery mining cycling companies? I tend to hold those through I tend to hold the battery mining companies through sustainable resources ETFs. And because number one, I really don't want to spend the time getting to know everything about mining. I don't want to spend the time. Mining to me, I'm sure it's exciting to some people. It's not exciting to me. That's something that I'm really happy to own through an ETF. And you guys will find out there are many things that I'm happy to own through an ETF simply because number one, maybe I find the subject boring and I don't want to dedicate dozens of hours of learning or to learning something about it when there's something else that I'm more excited about. Number two, it may be too complex for one person to understand when it comes to evaluating a company. I'm becoming more and more convinced when it comes to genomics that we all may be better off owning ARCG than trying to pick and choose our own genomic stocks and when to buy and sell. So did you guys? I'm trying to see. Did you guys see the poll that I did on whether or not the market is overvalued? So my personal opinion on whether the market is overvalued is, like I said, I see overvaluation in tons of companies right now. I do think that we're probably going to see some correction this year. I don't think that it's getting me much more than a in the road, though, meaning I think we'll see a correction. The market will be down for a month and a half, 2 months or so, and then it'll bounce right back. I do think that that's what's going to happen. And there's a couple of reasons for that. Number one is basic fundamentals. The market can only be separated so long from the traditional ranges of price to book values. And right now, I mentioned before, it's like 4 and 5 times standard, like a 10-year, 15-year standard deviation, which is an indication to me that either book value has to come up or prices have to come down. I think the prices are going to come down at some point because it's a lot easier than book value going up on thousands of stocks. So I do think we're going to see a pullback this year. I think that if you have access to cheap money, it represents a buying opportunity. Any thoughts on Hyzon Motors? I don't have any thoughts on Hyzon Motors yet, guys. I haven't looked at that. I'm planning for my 3-year-old to go to college in the future. Would you recommend me to open up a 529 account and just use my IRA? So you have 2 different options for that. You can use your Roth IRA, funds that come out of that are spent on post-secondary education come out tax-free, or you can use the 529 account. The 529 account is the account that's really designed for that purpose. There's a couple of things to be careful with, though. Many 529 accounts have pretty onerous fees. And depending on which state you live in, you may or may not get a deduction on your state income taxes for making a contribution to an out-of-state plan. For example, USAA owns, I think it's Utah's plan or something like that. They have exceptionally low fees and you pay no commissions whatsoever. But if you're living in like Illinois and you make a contribution to Utah's plan, you won't get that tax deduction. And so pay attention to that. But I would definitely go with a no commission plan that has really low fees, something like Fidelity's plan or USAA's plan or something like that. Gold doubloons. Yeah, I don't have a ton of physical gold, man. I don't know what the deal is. I've just never been attracted to gold whatsoever. What about candy? So I actually went to an auto show here about a year ago and got to sit in one of the candy vehicles, and it's very cheap. It's kind of a piece of junk. They're here in the U.S. You can buy one of their vehicles after rebates for under $10,000 or so. But I'm not excited by it. And I think that even in China, it's got to be viewed as a piece of crap. I think that it was just kind of a giant snow job, and they brought it over here. They're selling the vehicles. There's no technology in it whatsoever. It's got crappy range, and it feels like you're sitting. It feels like you're sitting in like a Barbie car, to be honest with you. So I don't know if you guys have kids or not. I've ever sat in a Barbie car, but that's literally what Candy's vehicles feel like. All right, maybe a little bit better. It's a glorified golf car. So what's your opinion on Tencent and Baidu? Are those stocks that you own? I don't own Tencent or Baidu outright. I own them through an ETF. And Baidu is one that I would definitely consider owning. Tencent probably not so much. A lot of their business is based on their investments in other companies, and it's actually pretty opaque. Baidu, on the other hand, I would consider owning outright. They're a little bit more open about what their business model is and how they're doing that. And they're a little bit more transparent in the way they do business too. I'm not saying anything necessarily bad about Tencent. I'm just saying that their core business model doesn't really match with the investments that they're making right now. And that's what I find a little bit concerning. No one added the following comment: I go first to the moon. Okay. So, is it wise to pull the initial investment once you've doubled your money, and will it be taxed? So the answer to the will it be taxed is, if it's in a regular brokerage account, then yes, it's going to be taxed. So there's a couple of different ways, and it depends on how many lots you have invested. But most investment firms, if you go to sell an investment that you make and you have multiple different lots, you can always sell the lot that has the highest cost basis in order to have the least amount of taxable transaction, meaning the least amount of capital gain. That's something you can always do. Well, you can do that at most firms, is do lot-specific sales. And that's a strategy that financial planners use all the time. That's a strategy that financial planners use all the time to help control taxation. But yes, it's going to do that. And should you do that? I think that the idea of playing with house money is a form of mental accounting that's not really very useful, right? If I had taken, so I bought like 100 shares in, I think, and I don't remember the exact price, but I think I bought 100 shares of Tesla in 2011 at like $33 a share, right? That 100 shares now is of course 500 shares. If I had waited and when that doubled to $66 a share and sold half of it and said, now I'm with house money, I would have missed out on a lot of gains, right? I tend not to do a lot of selling because I'm in a higher tax bracket. I don't like paying taxes. And plus I live in California and I have to pay, California taxes on everything too. For a couple of reasons, I don't do that. Number one, when I'm looking back at, and I look at not just my account, but I've looked at thousands of, maybe multiple thousands of client accounts over the years. The most active traders are not the ones that make the most amount of money. It's the people who are buy and hold, make more money in part because they're not paying a lot of taxes and because they're not mistiming things. For every time you win, look, anytime there's a transaction on the stock market, every time you buy or sell a stock, there's a winner and a loser for each transaction, right? Even though you can justify it and say, well, maybe that person hit their target, whatever, and there's still a winner and a loser for each transaction. When you look at things, the further out you look at things, 5 years, 10 years down the road, the more clear of who that winner is or who that loser is in that transaction becomes. So I don't really like the idea of when something doubles, you sell it, and then you're playing with house money after that. Like I said, it's mental accounting that I find less and less useful the more time goes on. Unique Mister says, go EV. I did a video on them. I'm really kind of reserving judgment on Canoo right now. I'm more interested in how their subscription model works rather than their actual vehicle. I don't find much incredibly special about the actual vehicle, and I think that subscription model may be a way. So as much as I'm married to the idea of car ownership, I realize that societies change over time, and that maybe people 10 years younger than I am, 15 years younger than I am, won't want to own a car. Like a lot of them don't want to own homes. I know that's changing too, but maybe they won't want to own a car, and it would be easier to have a subscription service. I can tell you one thing. I have a boat that I built, by the way, and I have to tow that down to the water. And to tow that down to the water, I have to have something that can tow it. I don't necessarily need something that can tow it except 2 or 3 times a month when I take it down to the water. I like to, when I said I built the boat, I needed something to haul sheets of plywood back to my house. Well, I don't want a car. I don't want to drive a gas guzzling car that does it all the time. So wouldn't it be nice if I had an app on my phone, and when I wanted to go pick up 10 sheets of plywood, I could hit a button on my phone and a Tesla Cybertruck comes up, and I can go down to Home Depot, get those 10 sheets of plywood loaded in my truck, and come back and unload them. If I needed to tow my boat down to the water, I could call that Cybertruck. And yet, if I just needed to go to the office for the day, then I could get a Model 3 or something like that. I think I would be happy with having and not carrying anything around in my car, just carrying it on my person. I think I might be happy with the subscription model in the future. Maybe I'm alone on that, but I think that the idea of car ownership might change over time, and the whole idea of what people want in a car might change over time. The idea that something like this could be disrupted isn't really new, guys. Like things change all the time. So let me see here. What's your Fresh Aquarium says, what's your currently on 50% long, 30% short-term cash secured puts, and 20% strong conviction leap calls. I'm trying to balance bearish bubble corrections and strong conviction calls. Okay, my strategy is buy and hold. And partially because it's the least expensive strategy, and that meaning it doesn't cost me anything to do that. One of the nasty things about options, and the good things and the predictable things about options, is 80% of options or so expire without being exercised, which means that the buyer of the option never has a chance to exercise it, and the money is just wasted on it. The seller ends up making a little bit of money in that case. So I don't do a ton. I'll sell covered calls, but I don't do a ton of any other type of options trading. And actually, it's problematic with my position. Being a financial planner, it's problematic too. There's a little extra paperwork that I have to do with my firm because of their requirements. Let me see here. So Fresh Aquariums, thank you very much. Now that it's announced that Hyundai Kia is not partnering with Apple for an Apple car, do you think that VW actually, well, the last announcement that I saw was that Kia was going to be partnering with Apple. Casey, maybe something came out today or yesterday that I haven't seen yet, but that the last indication I had was that Kia was going to partner with Apple, and that they were looking to produce that somewhere in Georgia. If VW was conjecture on my part for a vehicle that would be produced in China, I think that's probably their best bet. I don't know. They may end up with multiple partners. It looks like they're not using the Foxconn model to produce a car. They're going to do something else. Katie, MVIS, I covered that a little bit earlier in the Katie Bland. I covered that a little bit earlier in the cast today. I don't see a compelling reason to invest in Microvision at this point. I cannot explain the run up in stock price that they've had. It's a 25-year-old company, and I don't know why. Maybe they're riding the EV wave, but when I'm looking at the news associated with what's been publicly released, I'm not seeing a compelling reason to invest them at this point. They have about 250 patents or so. Only 10 of them mentioned Lidar at all, and none of them are involved in the auto industry. Somebody just sent me something on micro imaging that I haven't had a chance to look at yet. So yeah. And Kingston says conduct more research and make a video on MVIS. I might do that. I might do that. So Xpeng Motors is tops in smart connected car technology, patent applications 2019 among. Yeah, they've done a lot. And so one of the things though, when you look at Xpeng, and I'm an Xpeng holder, and I'm very positive on Xpeng. But if you go to Glassdoor and you look at what their U.S.-based employees are saying about Xpeng, it doesn't look good for Xpeng. It really, there's a lot of engineers there that say they don't even understand the point of what they're working on. So I don't know what's going on at that company in terms of their, because they do a lot of their software development here in the U.S. and they even have an office here in San Diego. I've driven by it, but I didn't stop by or anything. But Glassdoor. Underground guys, man, Glassdoor is a really good way to get a sense of employee morale at a company. So I would say that, I would say that take a look. Anytime you're going to invest in something that is early stage, the Glassdoor is a really good place to do some back-end research. So Terrence Kwong says, weird story on Apple. Kia said they were never in talks with Apple. Yeah, interesting. Okay. Yeah, so Reuters had a story that Apple and Kia were close to an agreement, or at least that Hyundai had passed on the agreement and said they would rather have Kia take care of it. So, yeah, interesting. Thoughts on Zoom news, $1 offering after it's run up today? I don't know anything about that. Okay, so you're interested. Kingston James says you're interested in investing in microvision because of mixed reality and not silly lidar. I don't think self-driving cars will be ready in 10 years. You know what? This is something we should consider, right? We should consider. There are a lot of computer scientists out there that say that level 5 autonomy is never going to be possible. I don't know if I necessarily believe them. Look, we can't even explain what consciousness is for human beings, and we are biological computers. And I know there are a lot of people that'll disagree with that, but I really don't see us as being much more than biological computers. And we certainly have something called consciousness. We have difficulty explaining it, and I can't necessarily prove that another individual out there is conscious, but I can look at the world and say it exists, right? So the idea that level 5 autonomy might never happen, I guess maybe that's true. But maybe we should think of what is Tesla worth if driverless ride hailing and never comes to be, or if full self-driving never comes to be. I still think that Tesla is eventually a multi-trillion-dollar company even without autonomous driving. I think that the battery storage and electric vehicles, and especially energy storage, is going to be that big of a business. But Kingston James says, are we ready for self-driving? I was reading another interesting statistic about self-driving. It's already better than humans in terms of collisions per million miles driven. It's already better than humans. The problem with self-driving is I was in one of the Teslas that has the beta for it. It doesn't drive like a human. Like, you're driving in LA traffic. You basically, every time you drive in LA traffic, you play a game of chicken and you force your way into situations when you need to change lanes. Tesla's self-driving app doesn't do that. Like, it won't say you're going to get out of my way or you're going to end up with a hole in your car, right? It won't do that. And if you think about that as drivers, you do that a lot. You subconsciously play a game with chicken with people stacked up in a lane that you need to get into, and you force your way in, reliant on that other person's goodwill to stop, right? And they could just not stop if they wanted to. They could force a collision. So right now, none of the self-driving apps I know will do that. I was in Tesla's app, and it was actually kind of sickening. Like, we actually missed turn because the vehicle, and we did this on purpose. We didn't intervene. We missed an accident on the freeway because the vehicle would not force its way into traffic. So once all of these vehicles start talking to each other, and maybe that'll change. But I think that full self-driving in autonomous vehicles may be a little bit further away than we think. And yeah, so I'm actually really curious to see what other people think about that. Not Zoom. Yeah, Jeff Bingham says Zomedica Corporation. I don't know anything about that. I would have to look into that. Look, guys, if the stock is sub $5, $5 a share, I probably haven't looked at it very much. And that's just, like I said, when I talk to clients in specific, recommending a stock, when I say recommending a buy, sell, or hold, or anything with a stock sub $5, it's actually really hard to do in my profession. And so I tend not to put a lot of time researching those. Let me see here. Yeah, heard the same thing about EV cars 5 years ago. Look at them now. Yeah, but look, Bryce, electric vehicles, like electric motors, the possibility of having an electric car has been around for more than 100 years. The first electric vehicles were made, first electric car companies popped up in the early 1900s. The problem with electric vehicles has never been the electric vehicle. It's been battery storage, making it cheap and light enough to be practical. And that was the thing that was holding it back. So if you've been involved in looking at electric vehicles for long enough, then, I mean, I got first interested in them when I was a little kid, like in the 1980s, saying, why don't we have an electric vehicle? And the answer to that over and over and over was the weight to energy requirements just weren't there until lithium-ion batteries. And really, they weren't there until the cost per kilowatt hour of lithium batteries dipped below about $1,000, and then wealthy people who are really buying it as either a virtue signal or as a status item to say, look, I drive an electric car. They are the ones who funded sort of that step down into a medium price car with more volume, and now that medium price car is now funded the expansion of to the Model 3. And the Model 3 is really what's funding the expansion into that $25,000 mass market vehicle that's available to everyone. That wasn't possible until first of all, lithium-ion battery technology wasn't invented until the 1980s. And I think it was 1983 and 1985, there were two papers, one American paper and one Japanese paper that were published that really sort of established the basic chemistry for lithium-ion batteries. There were some discoveries done in the 1960s before that kind of hinted at it, but it was 1983 and 1985 is when it really became a possibility. But like I said, the electric motor is not a new technology. Even the induction motors and the permanent magnet motors, like all these are really old ideas, and we've made minor improvements in them over the last 50 years or so. It's really been all about improvements in battery technology. And that's the real difference between now and 5 years ago, is that people didn't realize how quickly the cost of per kilowatt hour that batteries were declining. And now we're at well below $100 per kilowatt hour. So yeah. Let me see here. Let me scroll back up. Apple is a copycat. Okay, not sure what you mean by that. And opinion on Geely electric vehicles. I think it's actually hard to value. I don't understand. They're not traded here on the U.S. exchange other than over the counter, and those are representative like 8 shares or ADRs, and there's 2 different ones, and it's a little bit confusing. They're actually kind of hard to value because they own a couple of companies that aren't making a ton of money right now. But yeah, I'm looking more into that. And is it Geely that owns Volvo? I think they own Volvo as well, and therefore Polestar. I'm not really sure. I need to look more. I looked into them a few years ago and kind of dropped the idea. But yeah, I'll look into them again. Some people won't trust computers. Okay. So James Goodcheer says, my Tesla drives on autopilot so nicely. Driving changes your perception. James, have you tried to drive it in like Southern California traffic yet, or LA traffic? I don't. Like I said, I don't own a Tesla. I was in someone else's Tesla, and we did this as an experiment, and it was a bit clunky. Andres Lopez asks about Palantir. So I did 2 videos on Palantir, and I've done some work with companies that use sort of precursor technologies to Palantir in the past, when I was involved more on the investigation end of financial transactions. And all I can say is they have a lot of competition in their space. They've got the advantage of mystique right now. Like, I don't know why they developed. I think maybe it was the Peter Thiel investment, but I don't know why they developed this whole mystique around them. But they actually have tons of competition in their space. But I do think that they have a pretty good future. And here's the interesting thing that has changed about that Palantir has illustrated. It used to be that that money for startup businesses for Silicon Valley and money for the defense industry, those were like 2 separate silos. It used to be that you didn't see a mixture when it came to like angel funding or venture capital funding. The venture capital funding that went into Silicon Valley and the venture capital funding that went into startups in the defense industry used to be completely separated. I'm seeing a lot of companies here now in the San Diego area, and a couple of my old clients from another firm that are located in the Washington, D.C. area. They recently got large cash infusions for defense-related projects from Silicon Valley venture capital firms. So the nature of how the defense industry is being funded is changing. It used to be, like I said, that those 2 pots of money is never mixed, and Palantir has really illustrated that that's changed. So I'm really curious to see how this goes in the future. And I think that Palantir does have a bright future. Yeah. Let me see here. What are your thoughts on QuantEscape versus Romeo Power? So I don't know much about Romeo Power. I can tell you about QuantumScape though. There are 3 or 4 Chinese companies, small Chinese companies, that are already making solid-state batteries that are already in commercial production. And QuantumScape is telling us that they're not going to scale production until 2028. They're not going to have commercial production until 2024. Yeah, I'm not a huge fan of QuantumScape, even at current valuations. I know they dropped from 120 something a share down to 40 something a share. I am not. I don't even think they're a great buy at this point. I don't know anything about Romeo Power at this point. I haven't looked at them. Let me see here. Let me see here. Jason, your thought on Li Auto? So, yeah, I mentioned it earlier, Danny. Kingston James says Palantir has CII contracts. Of course, they're going to be mysterious. It goes beyond that. So if you look at their so they had an incident with Morgan Stanley that was absolutely astounding, where they had an executive that kind of went rogue using Palantir software and was using it to spy on other executives. He basically just became paranoid by all the connections that Palantir software was making, and it became kind of a big story. And it was actually kind of funny probably not funny for the people that got spied on in the end, but it was actually kind of funny in a lot of ways. But like I said, they are not the only player out there that's doing this. There's at least 5 or 6 other players, including 3 or 4 of them that are private, that are doing huge business in this area too. So yeah, and I just can't remember the name of the huge one that I'm thinking. I think it's Apteryx that I'm thinking right now. So Microvast battery manufacturer out of Texas with manufacturing in China. That's a company that I've been looking into recently. I'm looking at doing a video on them, so I'm not going to say anything about them right now. But yeah, so full self-driving. Okay. Yeah, one of the things that I don't hear you guys, and I'm sure this is my fault because of how I make videos. I generally just make videos about companies or things that I'm interested in, or companies or things that people that bring my attention to. But that's not how I spend the majority of my day. I spend the majority of my day actually doing financial planning for companies. I work for, I'm an independent contractor, but I'm registered through a company called Client First Capital LLC, located in San Diego. And so if you want to engage me for a business reason for financial planning, it would be jason@clientfirstcap.com is my email address. I'll leave that in the description. I just, on my YouTube channel, I can't put that in my videos for compliance reasons. There's a bunch of things going on there. And my company has said, you can mention us on a live stream as long as you delete it within a month, but you can't put it on any video that you leave up permanently. Right. So yeah, but interesting. But it's been interesting to see that I don't get a ton of questions on the financial planning stuff when that's what I spend most of my time doing every day. But like I said, it's probably my own fault. I'm really interested in technology and nerdy stuff like that too. Yeah, one of the interesting things that was brought to my attention recently is that 23andMe is going public. I can tell you one thing: a lot of people are going to misinterpret what 23andMe going public means and what it means to everyone else in the genomic space. So when you sign up for 23andMe and they give you your report on your DNA, so 99.9% of everything in your genome really just is you being a human being. It's nothing about you as an individual, meaning that 99.9% of the human genome is identical across all of our species, and only literally 0.1% of the genome kind of makes up what you as an individual, right? And then there's also the exome 2 guys. Don't forget about that. That's all about encoding for proteins. But the report you get from 23andMe really just covers 40 or 50 different single gene diseases that you may be a carrier for, and it tells you a little bit about your ancestry, right? That's all the report that they give you. That's all the sequencing they do for you. But the issue is they've collected all of your data, all of the data for your exome, all of the data for your genome, and now that is what is valuable and what it is they're selling. I think they're at somewhere close to 10 million individuals who have been sequenced at this point, and that's the real value. Is they're using all of this data they've collected and AI to sift through that to sell conclusions and to sell research to other companies. So when it comes to 23andMe, people are looking at them as this DNA ancestry testing service, and that's their value. That is not their value. The value is the millions and millions of people's data that they've collected over the years. So that's one of the things I think that would be that's going to be a sleeper when it comes to 23andMe, is that their data is going to be a lot more valuable than people think it is. No Limit Life says, I really enjoy your videos. I appreciate your work. Do you have a Discord? I do have a Discord channel, but it's through my Patreon, and it's $5 a month if you guys are interested in supporting my work. And that $5 a month really goes to paying for me to have access to premium news sources, so I can do all the research that I like to do. Let me see here. And James Goodyear says, Tesla will stop for a person crossing the road in the dark when you can't see them, can avoid a deer. So I grew up in Texas, and if you don't avoid the deer, well, that's dinner. I'm not kidding either. There's a couple of times I brought roadkill home as a kid. But so 23andMe merges with VGAC. Meet Kevin needs to listen to you. He's rated this company way down. He has no clue. You better stick with real estate. I watch Meet Kevin sometimes. He's just a little too amped up for me to listen to all the time. Let me see here. What do you think about Bitcoin? Man, that is such a loaded question. What do you think about Bitcoin? I've covered this before in live casts. Like I said, I don't really see it as an investment. I want to see this as a medium of exchange at some point. I'd love to see a medium of exchange sort of divorced from national interests and divorced from the interest of a central bank, right? I would love to see that, just because and also because blockchain sort of like democratizes these transactions, and there's a lot of confidentiality that's possible with them too. Which also, because of the confidentiality aspects, this was adopted very early by criminals, and that's the reason that it's here to stay. Is that it has a place in the criminal world. So I do think that I think that maybe Bitcoin will crash again at some point, but I don't think it's ever going away permanently. And we're going to see continued volatility in Bitcoin until it becomes more and more accepted by institutions. You know, what Tesla did today, they are kind of early when it comes to large firms accepting Bitcoin for large purchases. But the more they do this and the more firms that do this, the less volatile that Bitcoin is probably going to get over time. So I think that this is really that Tesla doing what they did today, purchasing $1.5 billion of Bitcoin, is really just one more step in legitimizing it for regular transactions. So, yep. So Chuck Fun says, is that ethical? Are you referring to 23andMe, Chuck? Yeah. Global Man says, what about hydrogen stocks, Ballard Power Systems? So I've done a couple of videos on Ballard on hydrogen stocks before, and look, I've done a lot of research on the hydrogen economy, like going all the way back to the original papers that were written in this in the 1970s. And a hydrogen economy would have been a far better way to go than a hydrocarbon economy. That much I can tell you. But the ways of extracting hydrogen from natural gas just were not carbon neutral, and now we use electrolysis, but you needed the price of solar to come down in order to make that a reality. But this didn't come. Basically, we missed our moment, and now a hydrogen economy is going to be competing with a battery electric economy. So I don't think we're ever going to see mass amounts of hydrogen cars on the road, especially when batteries are so good right now. I do think that we might see hydrogen vehicles in certain classes. Meaning, I think that a Class 8 hydrogen truck, much like Nikola wanted to produce, could be possible and could even be very beneficial, especially for extreme long haul areas like northern Canada or extremely remote parts of the United States or Siberia or something like that. I think that could be a possibility. I also think that in maritime shipping, because where you fuel is very, very predictable, I do think that hydrogen economy could work for maritime shipping. So, and in that way, Ballard Power actually has a huge advantage over Plug Power. So I know since I made my video saying that Plug Power is overrated, and I didn't have a lot of faith in the management, the stock for Plug Power basically doubled since I did that, and And there's been a couple of people been like, oh, you suck. You didn't predict this. And you're like, look, my opinion long-term on whether or not we develop a hydrogen economy has not changed. Even with the deal signed with Renault, even with the deal signed with South Korea, the idea that you're going to develop a hydrogen infrastructure in competition with the battery electric infrastructure, it's not going to win over time. It's not. The infrastructure for the battery electric world is basically already created. It's called plugs. They're in every wall, in every building, everywhere. Not only that, it's easily adaptable. Like building an infrastructure for hydrogen, when you have to build an infrastructure for compression, liquefaction, transport, all that stuff, none of the infrastructure for natural gas that you have today can be reused, despite what people think. It cannot be reused. A hydrogen molecule is a lot smaller than a natural gas molecule is, and you can't reuse it. So are any of these stocks going to be the next Tesla? Probably not. Can we see some linear growth out of these guys? Yeah. But if you're expecting exponential growth from Plug Power, I think you're going to be disappointed. If you're expecting exponential growth from Ballard Power, I think you're going to be disappointed. And the big thing with Plug Power is that they've disappointed me so many times over the last 20 years. I've loved hydrogen, the idea of a hydrogen economy for a very long time, and I've been consistently disappointed by it. So, I'm not invested in Ballard Power. I'm not invested in Plug Power. I may consider an investment in Ballard Power, but I want to see more of what they're doing in the way of maritime shipping. So Jason, what are your two favorite fintech stocks? Do you think Goldman Sachs will win with Marcus platform? I do not. Thank you for videos. I really watch. So my favorite one, my favorite disruptor is actually my favorite two right now in fintechs are going to be Square, and it's going to be SoFi once they merge with IPOE. So those are my two favorites right now. So I've owned Square for a few years, and I've made pretty good money on Square. And I just bought IPOE, which is the SPAC merging with SoFi. I think 3 weeks ago, maybe like January 7th or 8th. I can't remember. Yeah. So do you think Amazon will break out in a week? So Amazon's been stuck between 3 and 3,500 for like 7 months. That's right. It's going to break out. I don't know. I think there's first of all, I don't think there should be any uncertainty surrounding Jeff Bezos's step down from his CEO. He's been halfway out the door for a long time. Like the last time he appeared, from what I understand, because I don't attend all of these investor calls. But the last time he appeared on an investor call was like in 2009, which some executives do that for liability reasons. But I think he did that because he started to lose interest in his company. I think that he's going the Bill Gates route, and he's going to concentrate more on wild projects and on philanthropy. But I don't think that we should really be concerned. He's been halfway out the door for so long that his successors have been doing a really good job of running the company already. And yeah. Okay, so Judd, your question about whether what 23andMe is doing with your data is ethical. Well, yes, because that's part of the agreement that you sign up with. Like if you're gonna do testing with 23andMe, you read through their user agreement and you realize that they're going to own all of your data and your complete genome and exome. It's going to be anonymized, meaning they can't tie it back to you. But yeah, that's going to be used, sold. There are going to be conclusions drawn from it and all that sort of thing. But I mean, if they didn't tell you about that or it wasn't disclosed in their agreement, then it would definitely be unethical, but it is disclosed. So let me see here. So Juck Fun says, did you buy PI yet? The stock you said you would keep on your watch list? No. And to be honest with you, it's probably going to be a few months before I buy that. It's doubled in the since November or so. Do I feel like I missed out? I don't know yet. I want to get a better handle on, like I said, what's happening with what's happening with the revenue growth, what's happening with their adoption outside of retail is what I want to get a better handle on. But it's something that's very, very interesting. And there's no denying that the Internet of Things has not panned out like everyone thought that it was going to pan out. And but they are saying right now that they have so many opportunities outside of retail that it's not going to matter in a few years. I want to wait and see if that happens. And No Limit Life, thank you so much. In 2022, the Super Bowl will be held at SoFi Stadium in LA. Huh. So any chance that Johnson & Johnson will rise 40% like Moderna? Well, maybe over the next 7 years it will, but not like Moderna. Johnson & Johnson, number one, is just a much larger company. The whatever they do in pharmaceuticals is a large part of their business, but it's not the only part of their business. And they have a lot more, like I said, there's just a lot more going on. So the deal with Moderna's been around for a long time, and they never really made a profit, and they never really had a product to sell until this year. It was a 20-year science project, right? This year was the first time that they really did something with all of the money that's been poured into them. If you guys don't know anything about the messenger RNA technology that they're using, this is going to, and it's not going to, it already has changed the way we produce vaccines, and it's going to change the way that we respond to many different things. And messenger RNA is going to be used in medicine more and more and more. So Moderna is not going to be just involved in vaccines. They're going to be involved in a lot of things involving gene editing in the future. I think that this success they've had so far is going to fuel fundraising for them in the future, and I think they're going to be an important company going forward. So, and Andres Lopez says, what about 3D stocks like 3D and X1? So I was an early investor in 3D stocks. I saw potential that wasn't there yet, and I got burned really badly and lost money on Stratasys, lost money on 3D, lost money on X1. It got burned, stayed away from the stocks for a while. And here's the thing: there always seems to be something wrong with these companies when I look into what's going on. Always something. There always seems to be something. Like I keep comparing it to another business that I know, which is t-shirt printing, and to like DTG, like direct to garment printing. There isn't a lot of cost savings with direct to garment printing over silk screening. Silk screening is an older way of doing business. It's not as neat or as cool as DTG is. You can do much more. You can do more things with DTG and put out more prototypes, but you can do it a lot cheaper with silk screening, right? So that's always kind of been the issue with 3D printing as well. I think that the way 3D printing is going to be successful is probably not going to be a way that I'm expecting it to right now. It's going to be something that I don't expect. Like my son was showing me this website that sells nothing but custom made like Lego sets that aren't like real Legos. They're all 3D printed Legos, and they're selling minifigures for like $40, for a package of them, and they're printed on a 3D printer. Like Star Wars minifigures or like rip-off Star Wars minifigures. I think that this is the way, something like this is the way that 3D printing really finds its way into the mainstream, and not all of the other things that we've been predicting since 2005, 2006 timeframe that haven't happened. They haven't happened. Let's be honest, the 3D printing stocks have been a disappointment since about 2008 when they really started to take off, when we really thought that this was happening. They've been a disappointment since then, and they haven't really performed the way we imagined that they would. So Kids says, I can't find anything to buy other than Tesla, Neo, Palantir, and nndm, and Nano Dimensions. There is a lot out there to buy other than just those things. I would suggest that you widen. So here's the thing: if your primary method of researching is YouTube, and these are the only 4 stocks that you find that you want to invest in, it's because YouTube is feeding you what you want to hear, not necessarily what you need to hear based on their algorithm. So open up YouTube with a browser, with an incognito browser, and do your searches through the incognito browser and start looking for stocks to invest in. And you'll see a wider selection. So if you go to YouTube right now on your regular browser and just say growth stocks to invest in, it's going to feed you everything on those 4 stocks because it knows that you like those. So you can either use, like an incognito browser, or you can use something like DuckDuckGo, which doesn't record, any cookies or anything or any search history for you, and so it gives you fresh results. That's one of the things that I do whenever I want a different perspective on something, or a different perspective on investing, or different perspective on scientific research that I'm doing. Whatever it is I'll go out there and I'll do my searches through an incognito browser, or I'll use DuckDuckGo or something like that. But just to say that you can't find anything you want to invest in except for those things, I would actually be concerned that you're getting biased information if those are the only things that you're interested in at this point. So, and then CRISPR, Show favors CRISPR stock. So I'm actually going to be coming out with a part 2 of the Genomics Revolution Explained video here coming up pretty soon, where I'm going to break down sort of the different ways you can invest and the different industries you can invest, like, because there's gene editing, there's next generation sequencing, there's all kinds of things you can invest in when it comes to gene editing. But CRISPR, of course, the actual company CSPR is actually going to be one of my favorite investments in that space. So I don't actually have individual stocks in the space other than Invitae. Everything else that I have is owned through ARKG, right? Through ARK Invest Genomics Revolution Fund. What do you think of Cathy Wood's big ideas in 2021? Okay, here's the most interesting thing about big ideas for 2021. She didn't say anything about disruption in real estate, which I thought was really interesting. So Heritage Wealth Planning says, can I ask anything? Then why is Josh Scanlon so cool? I'll tell you why Josh Scanlon of Heritage Wealth Planning is so cool is because he's willing to help people out without expecting anything in return. That's why. If you guys don't know who Josh Scanlon is with Heritage Wealth Planning, he's one of the people here who has encouraged me to get started on my own, to do these live sessions, to do my videos, and has encouraged me when I've felt down about it and not wanted to do it. But yeah, so if you don't know who Heritage Wealth Planning is and you want to know about financial planning and retirement questions and Social Security questions, check out Heritage Wealth Planning. All right. So in the Netherlands, we're building bridges and houses with 3D printers. Yeah, we're doing that here too. And yeah. So Mehmet Yanmish says, Yanmish, is that how you pronounce it? Yanmish. Hello, what do you think about NEO stock price going up or down till Q4 report in March? So Mehmet, I'm not really focused on short-term reports that much. Like, I find them very interesting. I think that might produce a short-term pop one direction or the other. But when I buy a stock, my holding period is kind of theoretically forever on it. Like, I won't sell if it just keeps going. I'm not going to sell it. I'm not trying to make a short-term gain on it, and I hate paying short-term capital gains tax. So if you're going to buy NEO stock, I think that it doesn't matter what point you're buying it. If you buy it this year and you wait 5 years, you're going to be in pretty good shape. So yeah. So Heritage Wealth Planning says, thanks, Jason. You're all right. I don't care what Amar says. All right, great. So I pissed off Amar pretty badly today, so he might have actually said something terrible. So anyway, so with everyone talking about a correction, do you see we talked about this a little bit earlier in the cast here. I do see a correction happening at some point this year. Like I said before, I don't think it's much more than a bump in the road, and I think we'll continue to go up after that. But I do think we're going to see a pretty sharp correction here. When I say sharp correction, I mean probably 15% or so. It's going to last for. And it's going to last long enough to shake out a lot of weak hands who aren't really interested in investing for the long term anyway. And Shilul says, and I hope I'm pronouncing that correctly, says, how do you find an entering position for stocks? So there's a couple of different ways to evaluate that, and it really depends on what stock that I'm buying. Like, if I'm buying, and like I said, I own fewer stocks as individuals than I did in the past. I own a lot through ETFs, of course. But if I'm buying something like a value stock that's paying a dividend, then I'm going to look at like a dividend growth model to do that. If I'm looking at a growth fund, I'm looking at a dividend growth model to look at my perfect entry point for that, right? For that particular stock. If I'm looking at a growth stock like NEO or Tesla or Xpeng or something like that, none of those metrics really matter. The entry point really doesn't matter. Do I like, I just bought Lee or last week. Do I really care that I bought it and then it declined by $3 a share after that? I don't really care at all, because I'm not buying it for today. I'm buying it for 5-10 years down the road. And that's when I'll first consider disposing of it, is probably 5 years from now, right? When I'm thinking, has this reached its limit, or is the growth from here on out going to be linear instead of exponential? That's really when I'm going to make that evaluation. So when it comes to determining an entry point, I'm less worried about determining an entry point than thinking about what exit point is 5-10 years from now. And you determine that by looking at the total addressable market for what the company's producing, how much of that market share do you think they can capture, and how quickly do you think they can grow? And those are the real metrics that I'm looking at there. So let me see here. Opinion on Baba, man. Yeah, it's so my before November, my opinion would have been buy, right? But I don't know how far Jack Ma has fallen out of favor with the CCP. I don't know how hard he got his hand slapped by the Chinese government, and whether or not they're going to. Cause honestly, I listened to what he said and what got him in trouble. What we think is what got him in trouble, and to me, it didn't seem. Yeah, it was critical, but really, what he was saying was. That the Chinese government needs to remove some of the regulations that they have on financial transactions. They need to get out of the way of innovation so we can keep up with the rest of the world and really be the leaders in this fintech space. I didn't think any of that was really all that critical. So I was really kind of really concerned with the reaction where they essentially made him disappear for 3 months. So yeah, and I thought that was interesting. So. Would I buy Alibaba now? I think there's a degree of political risk in Alibaba that wasn't there before, and that's one of the things that's one of the things you have to consider anytime you're investing in the United States now or outside the United States is political risk. There's more of that than there has been in the past. So let me see here. Shula's Joe says, "Thank you very much for your help. I don't think I've ever learned so much from a YouTube video before. Thank you so much." I'm going to try and remain. I'm just going to say thank you. I want to be humble here, but that makes me feel good, though. Thank you. So thoughts on CCP? You know, I tend not to be critical of the Chinese Communist Party on my videos because, and it's hard. I don't want to be political, and but I don't want to shill for the CCP either. And I just want to recognize that the CCP is not the Chinese people. No matter how much the information is controlled, I don't think there's a reason for us to be in conflict. I think that there's every reason for us to grow closer together by doing business. And I think the best way for the United States to export our values to other countries is for us to do business with them and for them to see how we live. And there are things that there are a lot of things that we can learn from China and a lot of things that they can learn from us. Your opinions on Astra Satellites launch by SPAC? It's a pre-revenue company at this point, Dan. I don't have an opinion on it other than I know that it exists, and I know that they don't really have revenues. And yeah, so I'm interested to see what happens too, just because I'm interested in space technology. But this would be something that I'm probably not going to invest in at this point, and I'm going to wait. Motor says, "Do you have any PDD?" I don't think so. Let's see here. Kingston James says, "I hope we do less business with China." So countries that do a lot of business together don't tend to go to war with each other, and that's really what I'd like to prevent is us going to war with anyone else. Emmanuel Aisa, any thoughts on Oxy stock? You know, that is something that you guys may not realize because I'm so in EVs. You may not realize that I got my professional start in the world in oil stocks. And I don't have an enormously positive outlook when it comes to oil stocks for the future. Meaning, I think that there's a lot of possibilities over the next 3 or 4 years to see increasing demand, just as demand comes back and people start moving around a little bit more. But little by little, energy storage solutions and EVs are going to eat away. Because look at 49% of all end use of petroleum. 49% of end use of petroleum is just light passenger vehicles, meaning it's just cars and trucks on the road, right? So only 26% of petroleum use in the United States is not related to transportation, right? Roughly 12% or so is from air travel. Like I said, 49% is related to light transportation, and I can't remember what percentages are related to maritime shipping and to trucking, but it wasn't as much as I thought. And right now, we have Tesla entering trucking, we have Hyliion entering into trucking, and we have all these other industries that are looking at removing petroleum use from light passenger vehicles. that means, put it this way, there's still going to be a need for oil. We're still going to be drilling. We're still going to need it for high quality plastics. That's at least until microalgae starts producing plastics in volume. If that ever happens, who knows? That's something else that I've been looking at recently is what microalgae can do in terms of producing plastics. But little by little, these demand is going to be eroded for petroleum, and it's not just that there's always going to be a need for petroleum. Yes, there will, but a lot of companies cannot survive on 80% of the business. They can't survive on 70% of their business. They need 100% of their business to survive. And that's what a lot of folks don't understand about what's going to happen with the oil industry. If you take away 25% of the demand, a lot more than 25% of the companies are actually going to fail, or they're going to be forced to merge, or they're going to change business strategies because of it. So we're looking at disruption in the oil industry, no matter how fast, no matter how slow that electric vehicles become adopted, because of also energy storage solutions that Tesla's coming up with and hundreds of other companies are coming up with. We're looking at long-term disruption and decline in the oil industry over time. So yeah, my thoughts on Oxy stock, enjoy it for the next year or two. And so I am slowly but surely exiting my way out of all of my oil stocks probably over the next 2 or 3 years. Not just, it's really because I don't hold a ton of individual oil stocks anymore. Most of it I have through like an S&P 500 fund or through, like a dividend growth fund or something. But I'll be exiting those individual positions anymore because I don't see exponential growth possibilities out of those. Yeah. So Ford, GM, and a few others were 100% hot companies in the 1920s right now, and then everyone said it's just a car. Well, that's happened to EVs. Eventually, yes, and probably pretty quickly too. Largely because there's a lot less to produce when it comes to an electric vehicle. It's a lot less complex than what a lot of people forget, like I said before in the podcast, is the electric motor has been figured out for a long time. There's a limit to how much the motor, the suspension, all that stuff is going to improve. It's really going to be about the software and software margins. People forget how high margins are in software. So yeah. One stocks, see. Hold on here. I appreciate your thoughts because you're not bigoted in your videos. As Chinese Canadian, I run into racism disguised as patriotism all the time online. Thank you, Jason. Well, you're welcome. I want to be fair. Like I said, I don't want to be. I want to be fair. So, and I don't even like addressing politics on my channel. Let me see here. Most of Tesla's profits come from selling EV credits. How soon will they? Well, yes, Tesla is profitable on the back of selling regulatory credits. How soon will they be able to not rely on this? It's not going to be very soon at all. Like especially with GM and Ford and all of those companies producing their own electric vehicles now, they will not be able to rely on regulatory credits for profits for very much longer. They've had a couple $100 million in profits for regulatory credits for a while. So would you recommend Ford or GM for the long term? So I'm not sure I recommend either one of them for the long term, but if I had to pick one, it's going to be GM over Ford because of Ford's massive debt load. Global Man, what do you think of the octopus strategy to invest in 8 companies? I have not heard of the octopus strategy, but that's interesting. That's interesting. I have not heard of the octopus strategy. How does the Great Reset affect the stock market? The Great Reset has to happen for it to affect the stock market, but that's not going to be, number one, I'm not convinced that the Great Reset, the way it's been presented to me at least, is going to happen. Number two, if it did happen, there's not a way to predict who's going to be the winners and the losers in that. It's going to be a bloodbath in terms of disruption. Not like a real one. I'm just saying that lots of companies are going to go under and new ones are going to rise. So, Top Trader says GM currently produces 7 million plus vehicles currently. So if they will be fully electric by 2035, that means 7 million EVs a year. So is GM a good investment? It's not simply a matter of like they already have scaled. They know how to manufacture cars, and they already have scaled production down pat, and they already have industrial capacity. It's not simply a matter of doing that. A large part of what they sell is actually their full size trucks. Like was it not any? So the Ford F-150 is essentially the best selling vehicle in the United States for like 40 years running. And I know this is going to piss off some people. Ford F-150 is a piece of crap. I know I used them my entire life for different things. And while I was satisfied with the Ford F-150, after driving and being in very reliable Toyota large trucks for a while, I realized that you sacrifice a lot in reliability by buying a Ford. And I realize that's going to piss off a lot of people. But a large part of GM's lineup is those vehicles, right? So those vehicles have an issue when it comes to being battery electric. So I was in another Tesla Model X where those folks did an experiment to see. So if you guys don't know, the Tesla Model X was supposedly able to tow 4,500 pounds without an issue. The problem is when the folks I know that did this experiment with the Tesla Model X, their range dropped like 150 miles. Now, I don't because it was carrying a load, right? So the range is only 150 miles. So one of the appeals that people, one of the things that appeals to people who are truck owners is the ability to tow things. Now, a lot of people buy a truck and never tow anything. They just think they're going to, and they never go off road like they think to. They just drive it around town. But a lot of people own a truck for its towing capacity. I don't know how much range a Cybertruck has if it's towing 7,000 pounds or 10,000 pounds. I don't know how much range it has. I'm curious to see that. So I think that the adoption of an electric truck may be a lot slower than we think. Meaning that I don't think Cybertruck is, after their initial sales, they might not sell as many as they think. And if GM's trying to move over their truck line over into electric vehicles, they might not sell those as quickly either, unless something is done to address. And this actually goes to long haul trucks too. If you look at the supposed range for a Tesla semi, it's about 500 miles. If you guys have done any investigation into long haul trucking, you'd realize that those truckers need to make 600 miles a day. They must make 600 miles a day in order to make their nut every day, right? That's what they have to drive to make any money at all. Tesla Semi at 500 miles is coming under what a long haul truck driver needs. And so it's going to be limited to short hauls and to day trucking, which means it's not really a replacement for the Class 8 truck yet, at least not in all applications. And that's why I say there's room for something like what Nikola originally envisioned, which is a hydrogen fuel cell electric vehicle, or what Hyliion envisions, which is a natural gas and battery electric vehicle, which I think Hyliion's model, because natural gas infrastructure is already in place, I think Hyliion's model is probably going to win in the end, just because there's already 700 or so stations out there that have natural gas, and roughly 40% of what's served at those natural gas stations at this point right now is already renewable natural gas. It's produced from renewable sources. So I think that that Hyliion's model will probably end up being more successful than anything that's currently out there right now. So if you ask me if I think Hyliion's a good long-term investment, then it probably is. Ford is fix or repair daily. They're more reliable than they used to be, Shadman, but they're definitely not as reliable as a Toyota. So what will happen to Ford, GM, Porsche, Mercedes, Audi? Man, I honestly think that Ford's probably destined to go through a bankruptcy here in the next decade or so. They're going to have to reorganize. Like, there's still going to be a Ford around, but just like GM, it's going to be a new company. GM went out of business in 2009. They reorganized, and what emerged from the ashes was still named GM, but it was essentially a new company with some of the old assets and all the debt wiped clean. That's probably what's going to happen with Ford as well. They're just too deep in the debt right now. So let me see here. People are too optimistic, says Kingston James. When it comes to Tesla, though, there's a huge problem with pessimism. Pessimists keep getting proven wrong. That has happened with the shorts. I think Tesla has been the most shorted stock in the last decade, and shorts have lost billions of dollars. It's not because of irrationality. It's because Tesla keeps delivering on promises, and that's the reason why I tend to believe when they say they're going to do something, I tend to believe them. It may not happen on the timeline they say it's going to happen, but it's going to happen. Yeah. Let's see here. Why Apple didn't take Ford Motors over? I see a big chance of a collaboration between the companies. I'm not sure that Apple saw Foreword as a reliable partner, or one that understood the technology that they're trying to use or create. So they've been resistant to change. Ford has been really resistant to change over the years. And I actually, guys, I drive a Ford. I drive a Ford hybrid, like a 2009 or 2009, 2010 Ford hybrid. So and the Ford, the thing is, the Ford that I drive is essentially a Toyota. Even if Tesla, let's see, I'd never own a Ford again once I started driving a Nissan. Trucks and cars are the exception. If you bail out a Ford prior to hitting, if the exception is if you bail out a Ford prior to hitting 50,000 miles. That is unfortunately the sad truth. It's a little bit with the, like I said, with the large trucks, with like the Ford F-250, the diesel in it. It's a little bit less of that, but yeah. Tesla didn't wait for someone to build infrastructure; they built it themselves. Yes. That's true. But they did that because they had to, and they were able to do that because there wasn't any competition. Particularly when you're looking at building out a hydrogen infrastructure, this is what makes me doubt the build out of hydrogen infrastructure and whether or not it's actually going to replace what we have right now on roads. Partially because they're competing against the natural gas infrastructure that's there, and the fact that we can produce a lot of renewable natural gas at this point that is carbon neutral. It's not it's still releasing carbon in the atmosphere, but it's carbon that was recently sequestered, meaning it's like grown from sugarcane or something like that, or switchgrass or whatever. And then of course it's going to be fermented through a biological process and created. And you're also competing with the battery electric world too, which all that infrastructure is in place, which is the reason I don't think that anyone's going to invest the hundreds of billions of dollars necessary to build out a chain of hydrogen refueling stations all across the United States or the world. So you see, Tesla isn't even overvalued. Price of sales is 30, around similar to NIO and Xpeng and Li. Why do people? So the argument behind that, motorists, would be that by traditional valuation methods, all of those companies would be overvalued based on the amount of revenue they're actually bringing in at this point. So the question you have to ask yourself is, should you be evaluating Tesla? Can traditional valuation methods actually place a value on Tesla? And I don't think that they can. I think that they're a little bit closer to that with Xpeng. A little bit closer with that to Li, and a little bit further away with NIO. NIO has diversified interests there, but yeah. What do you think people will have to do in the face of robot automation and deep learning from every? So well, this is where we talk about politics a little bit. What do you think people will have to do in the face of robotic automation, AI, deep learning from every sector? I think that we are running into a huge problem right now where we have created a society where people of average intelligence, meaning people who are not like dumb by any metric, by any traditional metric, they are not going to be able to earn a middle-class living here in the future. There simply won't be a job for them to do, which is one of the reasons you're starting to hear more and more talk about UBI, which is like universal basic income. From someone from my age group, that idea sounds absolutely ludicrous to me until you start looking at what's really going to happen. We're probably looking at the bottom quarter of people in the United States and in most developed societies being unemployable. There won't be anything for them to do because especially, it doesn't even matter necessarily when you're looking at raising a minimum wage to $15 an hour or something like that. At all my businesses that I own, I pay my employees more than $15 an hour. But that's just, automation is going to replace not just people at the lower end of the economic scale, but people like, there's going to be a lot less need for CPAs. There's going to be a lot less need for tax preparers. There's going to be less need for financial planners like myself. There's going to be a lot less need for financial analysts that work for manufacturers. A lot of that stuff is, a lot of white collar jobs are going to go away because of automation. And what happened in the 1970s, to blue collar workers is going to happen to white collar workers now because of automation. And I think that that's a problem that will have to be addressed by new solutions. There's nothing in our past that's going to tell us how to deal with 25 to 30% of the population being unemployed, who are not employable because they don't have any job skills that are useful, or they were useful and now they're suddenly obsolete. And if you work as a financial planner, unfortunately, you get to see a lot of the plans and ideas that people had about retirement and later career evaporate as they become obsolete. This is one of the reasons why when I got fired from my job a couple of years ago, I decided that I was never going to work for someone else again, and that I was going to own a bunch of diverse businesses in industries that would be very, very hard to become obsolete, right? Things that aren't threatened by automation to a degree. Like I do this YouTube channel as a hobby, and even financial planning now for me as a hobby. My main businesses are things like my Brazilian Jiu-Jitsu Academy, my bar, my restaurant, those things that really can't be replaced by automation. Yeah. So hold on a second. I'm going to write my email address here. I'll write my email address here in the line. I'm sorry, guys, I can't do two things at once. Yep. So Jason at clientfirstcap.com is the email address where you guys can get in contact with me if you want to discuss financial planning. And if you guys don't know what a normal CFP does when they do financial planning, it's not advice on individual stocks, guys. This is retirement planning, education planning, business planning, estate planning, that sort of thing. Okay. Another valuation question: why do people bring up Tesla's P/E ratio of 1,300? Because it can be calculated all means that it's profitable, unlike many great tech companies like DocuSign. Yeah, that Motors, that criticism is fair to a degree. I don't think that. It's fair to agree to a degree. I don't think that people really consider the fact that you can't bring up that metric of 1,300 when companies like DocuSign are completely unprofitable, and therefore they don't have a P/E ratio at all. And you look at Amazon, where they were not profitable for 15, 20 years or something like that. There was no way to evaluate them based on price to earnings. I do think that it would. Well, yeah, they're not going to be in a place where that's a useful metric for many, many years. Yeah. A moral question. What do you think of Elon Musk and his abusing power via Twitter? Abusing power via Twitter. So unlike the president of the United States, when Elon Musk abuses his power via Twitter, the SEC comes down on him and fines him, and the Justice Department fines him for doing that. Like that's one of the reasons why he was off Twitter for a little while. I think that it was because probably the board of directors said, hey, you need to stay off Twitter. We have something going on or something like that. It wasn't because he decided to stay off Twitter. It was probably because he was advised legally to do it, which actually kind of leads me to think that there might be something going on. And it probably had a lot to do with that purchase of cryptocurrency. The reality is he's in a position to swing markets in favor for his company and against others simply by making a tweet. And I think that it's probably more useful to take CEOs off of Twitter than to let them have Twitter accounts. So, yeah. So Top Trader says no one is using Uber that I know of. Many Uber drivers that aren't driving and say they are done with the pandemic. Yeah. I don't own Uber, and I have not used Uber in about a year now. And I don't understand why their stock is so high either. But I would say that you probably, Top Trader, you probably live somewhere where lockdowns are a little bit more strict. If you lived in Arizona or something like that, Uber is still going strong there. There are no lockdown restrictions. So in California right now, I know that a lot of Uber drivers are only doing 50% of the business they were last year. Yeah. So, and it says downtown Chicago is a ghost town compared to before COVID. That's a lot. Yeah. Chuck Fun says nothing he do is against the law. Crypto is different. So with Elon, yeah, nothing that he does is against the law, but because he is the president of a publicly traded corporation, making investments in an asset, talking about it beforehand and pumping it up could be considered you're talking about it immediately afterwards and pumping it up could be considered illegal, or at least not illegal, but at least against regulations. That has yet to be determined. And he was probably asked by his lawyers just to shut up for a little while. They must have had this planned purchase of Bitcoin for a while, and I would bet that that's why he's been off Twitter for a little while. So AZN X Inc. says, what are your thoughts on diversifying into real estate at this time? So there actually are some opportunities in real estate, still opportunities in real estate at this time. If you look at residential REITs, they have not recovered fully from the crisis. Residential real estate is doing really well. If you want to go out and buy a house, you're not going to find any deals. Everything's overpriced right now, right? But residential REITs at this time, like apartment REITs, are actually reasonably priced and are still, anywhere from 8 to 15% below where they were pre-pandemic, which doesn't make a ton of sense. I think they're undervalued at this point. And so dividend yields look pretty good. The other thing that looks pretty good is, and this is really sad to say, is that the one portion of residential real estate that got hit very hard were long-term care facilities. So companies like LTC are probably a good buy at this point. A large portion, and this is really sad to say, and don't judge me for saying this, please, but a large portion of their clientele died, and their stock got hammered for it, and they had to cut their dividends, and some of them even had to do reverse splits on their stocks. But right now, I think there's opportunity in some of those long-term care facility providers, and there's a number of them out there that focused on long-term care facilities. And like I said, they got hammered. Now might be a good time to buy into those again. Let me see here. How can we save our money just before the crash, and how can we sense it at the right time? My suggestion would be to you, Nicholas, is to don't bother to try and sense it at the right time. The worst thing you can do for your portfolio is to actually get it correct once. Market timing, trying to time a crash or thinking when a crash is going to happen is one of the worst things that you could possibly do. I did a video a long time ago on what missing out on the 10 best days of the market can do to your portfolio. And there's actually a ton of research out there. Just look up 10 best days of the market, and you'll see a bunch of research papers that are out there that show that the market has averaged roughly 12% a year over the last, or 11% a year or so over the last 25, 30 years. But if you miss the best 10 days out of that 20-year time period, then your return went down about 3.8% on an annualized basis for a portfolio. And that's because the best 10 days in the market usually occur somewhere within a 10-day period of the worst 10-day market period, worst market days of any period in that same time period, right? And timing that perfectly, while you might get it right once, you're going to get it wrong on those other times. And it's just what history has shown and statistics have shown over time. A better strategy is to make long-term investments and have enough money in an emergency fund to where you're not worried about you're not forced to make a short-term decision that affects your long-term portfolio performance because you're not solvent anymore. Meaning, I tend to have taken the advice of my good friend Josh from Heritage Wealth Planning, and I have anywhere from 2 to 3 years of living expenses in cash, and the rest of that is invested in stocks, right, or real estate, because that's what I do, or businesses, because that's what I do. But the reason I do that is so I can remain solvent even when everything goes to crap. And I planned on my life and having an emergency that would last somewhere around 2 years. I did not know that there was a pandemic coming. That was a complete surprise, but it has essentially validated all of my paranoia at this point. And that's the strategy that I'm going to stick with for the rest of my life, is keeping my living expenses low, right? My uncovered living expenses are extremely low, and keeping 2 to 3 years, or at least if you can keep 6 months to a year of living expenses in cash, that's great. I tend to keep 2 to 3 years because I'm paranoid. I don't think things are going to go my way, and occasionally they don't. And put it to you this way, 2020, things didn't go my way, right? My Brazilian Jiu-Jitsu Academy was shut down by California. My bar was shut down by California. A number of other businesses that I had were impacted. But the fact that I have low living expenses, the fact that I had money in cash to live off of, meant that I was able to benefit from the stock market going up. It could have been, if I had no emergency fund, I would have had to liquidate stocks in order to keep my businesses afloat, and then I would have missed out on all the gains this year of the stock market. So I don't try to time markets or figure out when the market is going to crash. I'm not really concerned about when it's going to crash. I see crashes as buying opportunities rather than a reason to get out of the market, because the market will eventually come back. And if it doesn't eventually come back, then we've got a lot bigger problems than just my money in the stock market. So, yeah. You see here. Any other questions here? Thanks for the REIT LTC because I only consider buying real estate property than opposed to financial interest in them. So here's why. So I own AZNX Inc. I own a couple of rental properties and a bunch of REITs. I don't enjoy being a landlord. I really don't enjoy being a landlord at all. And put it this way, the average dividend yield that I'm getting on my REITs is somewhere around 4.5% based on entry point, right? And those have gone up over time. So my yield is probably closer to like 3% now or 3.5%, something like that. But when I look at my yield on some of the properties that I make is probably anywhere, depending on how the quality of it, is anywhere from 5 to 8%, return every year. But with a lot more work, maintenance, and trouble. I spend, 10, 20, 40 hours a year actually doing repair work at rentals at each property that I do. You have, I don't pay a management company, so I do all the work myself. I have to do, anyway, it works out to where I'm looking at the REITs that I'm invested in. I'm looking at over time, some of those have done 15, 16% annually for the last 20 years versus what I'm making in real estate by owning real estate outright in even in Southern California. I don't think I'm really beating the returns of the REIT over time. When you look at what the REIT is making in capital appreciation plus dividends or distributions rather, and then you look at the fact that you're not doing any of the maintenance, you're not going to court to fight with your tenants who don't want to pay. I'm thinking that it's the trade-off for me is I'm probably not going to buy any more individual properties, and I'm going to buy more and more REITs as instead. If I want to buy more real estate, it's probably going to be REITs. I don't want my investments to take up time, and when you buy a property, it takes up time. No matter what you do, it takes up time. Let me see here. So Carnival. Are you talking about cruise lines, Norwegian Carnival? That's not something that I would be interested in normally. I never really saw them as a huge growth industry, but one that really is just focused on paying out dividends. And they had nice dividends prior to the pandemic. It may be a good recovery play. I'm just not really into recovery plays. Yeah. All right. So thoughts on Microsoft and cloud services? I think that everyone is really looking at Amazon Web Services as their big competition right now. I don't think that there's any way around that. And so I think Microsoft Cloud Services are doing just fine. And I think that that's the sole reason, not the sole reason, but it's the reason that Microsoft is still relevant. I don't know if you guys remember this, but they were a stock that was stuck at $30 a share for, I don't know, maybe a decade and a half. It's basically I stopped paying attention to them because they were so boring and predictable. And it wasn't until they really sort of branched out in the cloud services that their revenue started to grow at a greater pace again. That made me want to pay attention to them. So, yeah. Okay. So, Sheila says, "What do you think about the big stimulus package coming? Is it going to push the market into overdrive?" I think it is. I don't have a way of proving this, of course, but it seems logical, not logical. I don't have a way of proving this, but I think that a lot of new investors got started with their $600 stimulus check and the $600 per week in unemployment benefits that they got earlier this year. And this is just going to keep that fuel going for a little while, the $1,400 that's coming. I think it's, I don't know if it's good. Yeah, I think you're going to see a bump up because of it. Yeah. So what are your takes on REIT funds like VNQ or VGSLX? So I hold one of those REIT funds. It's called RES. And I think it's the only one that is a REIT of REITs that just concentrates on residential REITs. So it's residential and long-term care REITs. And that's the one that I own the most of. And that's literally because I don't want to own a ton of retail. Like I've owned Realty Income for a number of years. And I have a pretty decent sized position in that. I don't want to own any more retail. So all I want is residential REIT. So I've started buying more and more res. So yeah. Kingston James says we need an MVIS video before Friday. Not going to happen, buddy. I got so much on my plate right now. So yeah. Shifan Hassan says, I do bottom fishing. Is that a good strategy? Well, that's called value investing, and value investing in the past was a very, very good strategy. We keep hearing rumblings that value investing is coming back. Maybe it is. It just has not been popular for the last 2 decades or so. It's got to come back at some point. Let's see here. Yeah. What about Baidu? I think I covered Baidu before. I think Baidu is a really great investment. A lot of people don't realize how far along they are in terms of artificial intelligence research. They're very, very far along. All right, guys, I have another appointment that I need to get on in about 15 or 20 minutes that I want to prepare for. It's like a Zoom appointment. So I'm going to go ahead and cut this short today. I wanted to say thank you to everyone who showed up. I was not planning on doing this today. I literally was just going to test my microphone out. But thank you for everyone who had questions today. And yeah, I look forward to seeing you guys next time. And I'll try and do a live stream at least once a week from now on. I really have enjoyed these a lot more than I thought I would. You guys are always great. Thank you so much. And I look forward to seeing you again. Bye-bye.